Bitcoin just fired its first real warning shot in months. Volatility has snapped back to life. Short-term holders are capitulating, and one of my key on-chain indicators is flashing a signal that we haven't seen since the last major cycle shift. So in this video, I'm breaking down exactly what's happening and how the underlying data is setting up for a major decision point in the market. So let's get into it. Now, for weeks, everyone's been moaning that the market is boring, that volatility is dead, and that the price is going nowhere. And then, right on cue, volatility just wakes up. And this is exactly the part of the cycle where people tend to switch off mentally, right before the conditions that actually matter start forming. And over the past few days, we've seen a very reasonable uptick in volatility, as seen here by the Volatility Fractals indicator. And it's not the euphoric kind of a blow off top, but the structural early movement type that usually precedes real directional shifts. And that's why I always tell people, when things finally start moving after a long period of chop, these are the moments worth paying attention to. Now, the first thing I want to address is the market structure itself, because Bitcoin has been testing and so far respecting a really solid support level around the $100,000 zone. Buyers are definitely stepping in exactly where they needed to, and it doesn't mean the macro is guaranteed bullish from here, but it does show you that the market still cares about this important area. And on the upside though, we've got a clear resistance band around the $115,000 level, and for the bull run to meaningfully reignite, that's the zone that the bulls need to fully reclaim. Not wick into and not flirt with half a day, but properly reclaim it, close above, and use it as support if possible. And if that happens, the trend structure is more or less back on track. But right now, my bias is basically 70-30. I'd say there's a 70% chance that we're still in a broader bull market trend, but also 70% chance that we've got some short-term weakness to work through. And that's not contradictory. It just reflects the nature of how Bitcoin behaves near cycle midpoints and turning zones. It's entirely possible for the long-term trend to be intact while the short-term gets messy. And because of that, I'm personally preparing for further downside. I think the upside is absolutely possible, and if we move up, I'll be pleasantly surprised. But in terms of preparing and positioning, I'm now stacking cash in anticipation of a potential breakdown to $95,000. That's the first area where I'd start leaning in heavily into buying. And if we break below 90,000, then I'm just buying outright. But even then, I'm maintaining a slightly bearish bias in the short term, unless the signal flips cleanly. I'm not throwing the entire kitchen sink until everything aligns, but I absolutely want dry powder at this moment, ready for a deeper retrace if it happens. Now, one of the reasons I'm not screaming bearish here is because if this were actually a confirmed bearish market transition, I'd expect to see one thing in particular, which is red colours on the capital flow momentum indicator. And this indicator is designed to track the underlying strength of capital flowing into or out of Bitcoin by measuring changes in the realized cap, which is essentially the dollar value of coins based on the price each coin last moved. It takes the raw day-to-day change in realized cap, calculates the delta, and then smooths it to extract the true momentum behind the flow. And after that, you get two layers of information: the raw capital inflows and outflows, plotted as the columns, and a smooth momentum line that highlights whether capital pressure is building or fading over time. And when the line sits above zero and it's blue, it suggests a net positive capital environment. But when it drops below, it reflects net outflows or weakening demand. But in simple terms, this tool just shows whether money is flowing in or out of Bitcoin. Now, if we look back at the previous bear market, this metric absolutely nailed the transition. You saw a long, persistent period of red capital flow momentum readings. That's capital bleeding out of the system, but it's not happening today. The readings are still printing blue. They're not screaming euphoric strength, and they're absolutely not showing the structural deterioration you'd expect to see in an early stage bear. But the only caveat here is that right now the indicator isn't printing the next bar yet, and it's looking pretty bearish as it's turning over. But trust me, I'm watching this closely. A decisive flip here would be meaningful, but until then, capital flow remains supportive of the bull market thesis, albeit at a diminished rate. Now, another major signal I'm paying close attention to is the Coindays in loss for short-term holders. And this is a new metric that I've created that often gets overlooked, but it's incredibly informative at cycle turning points. In short, this metric tracks how many Coindays, which is the amount of time coins have been held, are being destroyed in loss by short-term holders. So when you see this metric spike, it usually means a large cluster of short-term holders are capitulating, selling coins at a loss, and essentially just giving up. And the thing about this behavior is that it tends to show up in two very specific types of environments. Either you're getting an unbelievable buy the dip opportunity in an ongoing bull, or you're at the start of a bear market where early capitulation becomes persistent. But right now, this metric has just printed the third largest spike in the last 3 years, and that's meaningful. And you now have to decide which camp you believe we're in. Are we seeing the type of capitulation that marks an intermediate reaccumulation point in a bull, or are we seeing the beginning of a structural rollover? Now, look at how the previous bear market started. You've got initial spike, then the metric kept printing extremely high readings as short-term holders continue to capitulate, and that's how downtrends sustain themselves. But today, we've got one huge reading, but we haven't yet seen that repeated grinding cluster of pain. So today, this fits my broader view that we're on thin ice in the short term, but the long-term structure hasn't broken yet. So to wrap things up, the big picture here is that volatility has finally come back to life, and that alone should put everyone on alert. When a market sits quiet for too long, especially like Bitcoin, and then suddenly starts expanding again, it's usually the early phase of a much larger move. The direction isn't confirmed yet, but the energy is unmistakable. And at the same time, the capital flow momentum readings are still holding above zero, and they're blue, and that matters. In every major bear transition we've seen, capital flow deteriorates first. It turns red, stays red, and signals that real money is leaving the system. We're not seeing that yet. The structure is strained, don't get me wrong, but the underlying capital picture still supports the broader bullish thesis. And then finally, you've got the wild card. Short-term holders are capitulating aggressively. This latest spike in Coindays and loss is one of the biggest we've seen in years, and that kind of behavior tends to show up right before major reversals, or right at the beginning of deeper breakdowns. It's the type of signal that forces you to pay attention because it marks the emotional exhaustion in one of the market's most reactive groups, which is the short-term holders. But putting all that together, you've got a market that's conflicted, clearly loaded with energy, and standing at a real inflection point. The long-term trend hasn't broken, in my opinion, but the short-term trend absolutely has something to prove. If you're serious about Bitcoin analysis, my full custom indicator suite is now live. Built for investors looking to gain an edge through deep cycle signals and advanced on-chain insights. It's available now through the link in the description, where you'll also find my free newsletter. And if you found this valuable, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. And I'll see you all in the next one.